Good morning, traders. Welcome to Monday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to check the news so that we know what's going on and when it's going on so that we're not taken by surprise by anything. So looking at the news announcements for today, generally there's not a whole lot going on across the board. There's some early morning, investing.com, again, they always qualify their news as a little bit higher ranked than I think is necessary. But sure, we'll say it. There's a medium news announcement that came out earlier this morning. Going into the actual U.S. session, though, 10 o'clock, we've got the CB employment trend indexes. Previous was 98.81. This is all small stuff. I mean, there's nothing really going on. The biggest news announcement is a medium one at 12 with FOMC member Bostic speaking. That's it. So the news calendar is very, very light for today, which isn't necessarily a bad thing, especially for a Monday. Sometimes it's kind of nice for a Monday. So with that out of the way, nice and easy, let's take a look at some charts for today. Today being 1/11 of 2021. First up on the list, we've got the NASDAQ, which has a really nice rotation to the upside. The big thing that stands out here for the NASDAQ is that it still has an open gap, left behind that weekend gap from the highs and gap down. That's not, that's usually not a great thing. That's not going to make buyers super impressed when they're buying into the weekend expecting a big gap up and they get gap down on. That's not going to make anybody too happy. But realistically, I don't think anybody who was buying way up here, aside from people chasing, was really expecting it to go a whole lot further anyway. So I don't think this comes as much of a surprise. I don't think a whole lot of people were necessarily trapped up there. So with that in mind, realistically, if it is going to push down, anybody that was trapped, they're going to have their stops likely a little bit tighter than they're supposed to. So it should be a little bit higher, which may spark a nice little stop run down into support. And that's really where I think a lot of the buyers who have been kind of along for the ride and just waiting and waiting and waiting, that's the reload point, right? That's where everything finally comes back to play, where they're able to jump back in and start pressuring the market back up. Then on over to the S&P, which has a similar structure, of course. It's another index, but just like we've been seeing, there's a bit of a deviation away from how the S&P is moving versus how the NASDAQ is moving. The tech sector, obviously, in 2020 was just a little hot. No big, no big deal or anything. But the S&P and all the other markets, they were good, but it wasn't anywhere even comparable. So coming into this year, it seems like things are a bit shifty now. The NASDAQ is still strong, but the S&P is really, although it's kind of floating under the radar, holding these really aggressive levels of support along the way, and seeming like there's still a whole lot of strength. Buyers are still propping the market back up, and we're just breaking above that previous swing high, and that's where a lot of aggression starts stepping in. So knowing that we're in a level of aggression and buyers are obviously defending the midline of support of the channel, they're going to be looking for a bit more continuation higher, especially knowing that here again we have a weekend gap and it's a little bit more likely to fill if the buyers are going to take over. We've already had that nice dip down, the buyers had their rally up, now they're getting quote-unquote trapped on. I still don't think that there's that many people stuck up there. But if it is going to want to pull back and start triggering in some stops, and a deeper dip down towards the 3770s would be a lot more beneficial for buyers, especially if the timing can line up really well. If the timing can line up really well to the bottom of the channel, that's where things get very interesting. So that's the zone of interest. If it can get maybe one more leg down, a two-legged pullback to the bottom of the channel, they could get really nice. Switching gears over to the metals market now with gold, and we can see that it's got a good continuation to the downside. Sellers are just smashing this market. But caveat, right? There are a lot of things that are standing out here at the bottom that are potentially saying, at the best, the buyers have a shot at maybe rotating this into a range. Not saying total reversal, right? But at the best, they have a shot at turning this into a range. And then from a range, if they can accumulate enough, then they can turn into a reversal. We got to go range first, usually. It's not all the time you get a V bottom. So with this continuation down, we did blow off the lows of the channel twice. When you have a double overshot, that's where you want to see what's going on down there. there's a MACD divergence pushing back to the upside, showing that there is an overextension on the lows. We already know there's an overextension on the lows. It's blowing through the bottom of a channel. But realistically, this helps technically confirm it even further. So now if the market does want to dip a little bit lower, it's more likely going to be holding the inside of the channel as support to rally it back up. I wish that the broken L1 potential that was setting up here was like actually broken a little bit more, and the timing would have worked out a little bit better if all of this had happened earlier. So it's going to be a little bit sloppy down here on gold. It's not offering up very much opportunity from the bull side, and I think that's fair. The sellers have been dominant, and giving the buyers a chance, they're going to have to fight for it. So realistically, if they're going to fight for it, the dip back down to the inside of the channel is going to be the zone of interest. If the market's going to rally a bit further up, sellers are just waiting and hanging out 1890s to 1900s, ready to push the market right back down again. Over on crude oil, we've got a good continuation to the upside, a nice ascending wedge that's showing some mediocre structure. It's not the best looking wedge on the planet, realistically. This could look a whole lot better, which usually means that it's begging for a bit more refinement. That could mean that the wedge bottom has ended up becoming something along the lines of this, but this isn't really proving anything either. None of these zones are really lining up yet, and that usually means that a larger level of structure has yet to come. With that in mind, a larger level of structure could be back down towards an obvious point of interest, which, whoa, $50 mark. Who would have thought? So the move to the downside, we've got this initial leg down, and it's after an overextension on the highs with a gap on the top. It's still an open gap, but this is beginning to look like a bit of a megaphone. And if the market is going to want to pull back, this is the zone where we're going to get that extensive third leg down that begins that large cycle for a later on final leg, right? You've got that final leg down, the extensive middle leg, and then the final one, which is usually the same size as the first. That would put us right at the bottom of the megaphone. That would line up these 2 points, and that would give us our better point of structure. There are a couple other zones of interest that could give us some structure, I guess, which might be a narrower high looking off of these really two tiny, tiny little swing lows. But that's about it. So there's not a whole lot of structure as of yet on the lows. On the highs, it looks really nice, which means that if it is going to bounce here, a little bit more apt to be on the sell side, although the market is still screaming higher. I just don't want to be a buyer way up on top. If we can get a bigger dip down back towards 50, especially if timing lines up nicely towards the bottom of that rising support megaphone area, that's where things get a lot more interesting. Over on the euro, we have a kind of a failed attempt from the buyers, which is a great sign for the sellers. The buyers tried rotating this back up, and with the buyers obviously in the bigger picture, we know the euro has been screaming to the upside. But in the 15-minute chart, it's been a massive range. It's not going anywhere, and the buyers haven't shown up to the party yet. The reason why I say the buyers fail, just as a side note, we had this really nice descending wedge to the bottom, which broke, attempted down, failed, and that looked like it was the perfect shot for buyers to take this back up. And then it rolled back down to another new low. Total game changer. So with the buyers failing once again, sellers are going to be looking for a rep L1 back to the downside, and now we're in a situation where the best the buyers can hope for is a range. The range is already inside of a bigger range, and it would be happening at the lows. If it's going to be forming a range, this is a perfect spot for a shorter term range. At the bottom of the wider one, looking for false breaks on the lows, this is where wider, longer term swing traders are going to be looking to be building into positions down here, looking to hang on for rallies all the way back to man, the 1.24s potentially on the next rally up. And then finally over on Bitcoin with a big old flush, all the way back down to 32,000. They pierced into 42,000 almost. If we look, did they make it? Okay, on this one they did. Well, man, what is that wick on the highs? Sheesh. High 41,986.37. No, they didn't make it to 42,000. So a failed 42,000 attempt. and a rotation all the way down to a failed 32,000 attempt. It seems like buyers are trying to get a reversal, just like actually what we were looking at on the euro, where we've got this descending wedge and we're getting a nice breakout after a really strong hold of support in L4. The euro didn't hold so well, but this is the precursor to what you want to see. The euro also didn't have a broken L1 that was very nice. Bitcoin does. We shattered there's no sellers there at all. So with a 3-press wedge, a broken L1, and coming off of an L4, everything lines up a lot better for the success of buyers to come in. It's still a low probability trade given the reward versus the risk. But realistically, that's the zone that buyers are going to be coming in at, looking for a rotation back up. And potentially, again, with Bitcoin, you never know. I mean, just a month ago, we were trading at 20,000. Now it's coming off of 40,000. Who knows where this thing can go? This might be the last time we see 30,000, similar to the last time we saw 3,000. It's time to buckle up. Crypto's moving. All right, well, that's going to do it for today. Stay safe out there, keep those stops in play, and let those winners run. Until the next time, I hope you have a fantastic trading day, and we will see you in the next. Thanks.